Hello traders, this can be a shorter video. Basically what's going on today, we came down and we are catching a responsive bid finally. Basically the 2900 point on the S&Ps or the ES futures, that is the launch point for this massive move up that we've completely 100% retracement. And we've come down in the pre-markets here and now finally catching a bid. Likely to see a short squeeze the rest of the day. So just keep that in mind going forward here in the markets. My target for today, after such a massive major short interest in the markets, I'm actually targeting close to 3,000 for the markets today. If they do start covering in a big way today, so just keep that in mind going forward. Some things what I'm seeing right here. Basically, if we were to start breaking below 2,900 again, of course, you do not want to maintain your long positions. Okay. Okay, I switched it over to the Qs here instead of the NQ. Basically, this is the rocket area that we have projected out of on our Qs. And we've come right down to that trend line on the breakout. Right here, right now. This is a responsive buy zone for these markets. So just keep that in mind going forward, considering how heightened the implied volatilities are on the put side. Really jacked to the moon on these implied volatilities. This would be the area you would want to find responsive buying in these markets. So keep that in mind going forward. I know it's going to be a short squeeze, but I just don't know how big of a short squeeze we should expect here. And we have built out, as you can see, with all of these weekly value points, we have built out a lot of value in this zone. So, just keep that in mind going forward here in your trading. Lots of value in this. We may not actually catch much of a bounce today, but this is the area where the shorts would want to start covering, in my opinion, going forward here. So, okay, on our Russell, we have a value at price that developed out in November or January of 2019. This is the value for February. We had a value at price. This is the area we have found responsive buying for quite some time in the Russell. And if you go out and see what's going on right here in the morning session, we have come right down to that value at price and found some responsive buying so far this morning. So keep that in mind. This has acted as some support. We have broken it in the past on a severe sell-off, but this has tried to act as support in the past. So keep that in mind going forward here in your trading. This is, after such a massive sell-off, this is an area where shorts would want to start tightening up their positioning, in my opinion. So far, our morning scans, now we have leapfrogged on our bonds. It looks like some selling pressure coming into our bonds here. So far, they're not breaking, but something to keep in mind. This is what I consider a blow-off top situation. This thing is trying to trend and really catch some steam here on our bonds. If you look on our, I'll just put it on the 1 hour here. You see our fib fans and how I draw my fib fans. We have broken out above our upper fib fan. Typically, that is a continuation pattern, like a strong momentum pattern to the upside. But as you know, that we are hitting some support areas in our markets. So that very critical. If the markets do start breaking down today, that this thing is all over with. I mean, markets are, and I just don't think that the economy is that bad to justify that kind of breakdown. So really think that I'm still thinking that there's going to be buyers step up today for the weekend. I mean, some people are saying, oh, nobody's going to want to go long for the weekend. And bottom line is, it doesn't really matter about the weekend. It's a technical setup. I think we are overbought here in these markets and due for a day cap bounce rally for the markets. So that's what I'm looking for here going forward. Look at this, 1.5 million shares. That's extremely high for bonds this time in the morning. Very extremely high, considering we just now started breaking out you would have thought a continuation pattern would never see that kind of volume uh, at these elevated levels. So I'm really thinking they're taking some profits. They can sell their bonds right now, take some nice profits gains in the bond market, and uh, bring up cash. So if there is some rotation happening, I think the rotation starting. They're taking profits in their bond positioning, considering the extremely elevated prices right here, right now. And on the 1 hour, we are already testing our VWAP as we speak. So keep that in mind going forward here in these markets. Okay. Some of my scans, the SPY, 1.5 million shares, very elevated uh, volume already this morning on the SPY. So something to keep in mind going forward here, that buyers and sellers seeing what's happening with the bonds. I think there's the high volume is telling us that there is speculation coming into the markets at these levels. Yeah, I would have preferred seeing higher volume on the Qs, showing more interest in the growth sector, but not seeing that. That gives me a little. That's a little warning sign. So that's why I'm leaning more to think that this is a dead cat bounce, because they're still not piling into the technology, which is the growth engine for the markets. So that's the bearish take on the bounce the volumes that I'm seeing this morning. Okay, so like I said, I'm gonna try to keep this really short. So far this morning, let me update my scan real quick. Okay, there we go. Apple. I actually 45 seconds to go started buying Apple calls, thinking they were going to try to defend a 280 level this morning. Well, obviously I was dead wrong on that. So uh, keep that in mind. I only got like 3 contracts, but 45 seconds to go, and I lost $200 on the trade. So and yet yesterday's closing session, uh, and now it's even going to be worse than that. So, but yeah, AMD just it's just a parabolic chart on AMD. It still can really come in if these markets continue to want to sell off. And I'm just like I said, I don't think there's strong rotation back into the technology. So that's why if we do get a bounce, I don't think it's going to be a really good one. So just keep that in mind going forward here. They're taking money off Facebook. Bank of America, I do not like Bank of America being here at the top of the leaderboard. That's a financials warning sign. And oh man, look at Amazon. Kathy was taking puts overnight. She's going to be paid very well on Amazon puts today. Uh, they're even taking it off Gilead, and so yeah, so it's really taking uh, taking some serious hits here in some of the high movers here. And let's check our Nasdaq out. Yeah, Nasdaq. There it is. No, it's S&P 500. Some reason I'm getting both of them. Give me 1 second here. I'm gonna go ahead and change this over. Nasdaq 100. Nasdaq Composite. That'll work. Scan. Okay. Altimmune. Look at that. They must have some sort of drug out. ALT. Never heard of them before. Really high volume. It's only $1 stock, so you don't want to read too much into it. But it looks like more than double price in the overnight session. Apple's still up there. AMD, Amazon, Ameren. Okay. So American Airlines really getting hammered again. American Airlines is one of the top decliners for the week, almost over 30%, I think, for the week. Uh, they're even hitting Adobe here, just a software name. You wouldn't think stocks like Adobe would be getting hit so hard, but basically anything growth related is just continuing to get battered here. And so keep that in mind. And in the long term picture, I think it's really important, especially on the Qs, the growth story here. You know, this here is the. Let me go out on a 20-year weekly. Let's see how much I can see here. This here was the primary trading zone for many, many years. You know, for a very, very long was our. This is the blow off top stage. Okay, so we're just right here right now. So yes, we've come in considerably, but this can get much worse. So just keep that in greater context here of what's happening. This rotation out of technology, you know, and I'm just still not seeing major volume coming into tech this morning. So that's a troublesome situation going forward here with that analysis. If we would have just kept building out, you know, sideways here, this downturn would have never been so dramatic. But the Fed just keep pumping and pumping and pumping money and liquidity into the markets, just driving this market up to atmospheric levels. You know, we all knew this was going to happen. We just never dreamt it could happen so severely. So uh, just keep that in mind going forward here. Like the video if you like it. Make comments below, please, if you have any ideas other than mine. So basically today, one last comment. I would not be buying the weekly options this week for any type of scalp trades. The implied volatilities are jacked to the moon today, and anybody, it's a much lower odds trade to be looking for a responsive short squeeze with the weekly options, considering the theta decay and the IV crush that's going to be ensue this today, and considering that there was a lot of weekly value at this price point, we just might not get that big of a short squeeze, the kind of short squeeze people are hoping for here. So just some heads up, if you're going to try to catch a day cap bounce, you need to buy some time with those options. Thanks a lot.